Pound trims gains against euro in choppy trade and FTSE 100 rises after Theresa May triggers Article 50. Dollar index hits fresh 8-day high after remarks by Fed's Evans. The dollar rose to its highest in more than a week on Wednesday on outlooks for US and European interest rates and as investors saw the sell-off on US President Donald Trump's healthcare setback as overdone. Reuters reported European Central Bank policymakers were wary of changing their policy message after tweaks this month upset investors and raised chances of a surge in borrowing costs. The euro/EUR fell to $1.0741 following the report, its lowest since the 21st of March. That propelled the dollar index, which tracks the greenback against a basket of rival currencies, to 130, its highest since the 21st of March. The dollar also got a boost from Chicago Fed President Charles Evans, who said he was in line with most of his colleagues in supporting further rate hikes this year. Evans is known as one of the Fed's most consistent supporters of low interest rates. The dollar fell to its lowest in 4 months on Friday after the U.S. House of Representatives pulled a bill to rewrite the American healthcare system backed by President Donald Trump. Investors saw it as an indication Trump was likely to have difficulty with other parts of his agenda, including tax reform and fiscal spending that are likely to increase U.S. inflation. Those fears may have been overdone, analysts said, and with Fed officials still lining up to support further interest rate hikes, the dollar is on solid footing. The sell-off in the dollar that we saw in reaction to the news Friday was probably a bit of an overreaction, said Sean Osborne, currency strategist at Scotia Capital in Toronto. The underlying faith in the reflation trade is coming back a little bit today. Osborne also pointed to technical factors in the dollar forward/euro trade as the euro has approached the $1.09 mark. It really boils down to the fact that the euro rallied, it turned around and it is pretty expensive to be short dollars at this point, he said. European bourses closed higher after UK triggers Article 50. Despite a small blip after the UK invoked Article 50 earlier today, European bourses reversed their losses and closed in positive territory. By close of play, Joshua Marney, of IG, said, a historic day for the UK and Europe as a whole has been matched by a suitably volatile day for the FTSE, with initial gains fading to red, only to rebound into the close. Perhaps today's FTSE trade was a precursor of the times we have ahead both economically and emotionally, as this painful divorce progresses from stage to stage. First came disbelief, then came denial, calls for a second referendum, and today we moved into the reality phase, as the UK and EU alike realized that there is no going back. The forthcoming years will no doubt prove volatile and unpredictable, yet ultimately the end result is what matters most. For these negotiations will play a huge role in dictating the future prosperity and unity of the UK. Joshua Marney, of IG, says Theresa May's conciliatory tone minimized sterling volatility when she triggered Article 50 earlier today. In London trading, the pound hit a day's high of $1.2478 against the US dollar, before skidding back to $1.2419.